Memory stocks are a roller coaster. Wall Street's obsessed with the short seller instead of the earnings, and Apple might sell you a $3,000 phone. Today, Louie's real predictions for the second half of 2026. Welcome back to Navellier Market Buzz. Memory stocks were wild this week. Are they still a buy?
Oh, absolutely. Obviously, SK Hynix was the second largest IPO ever. It was oversubscribed. It's gapping up at the opening on Friday's trading. And there was a Barron's article that said it's going to be competing with Micron. So Micron's actually down. So Micron's a screaming buy because of the IPO. But I'm telling you, the order backlogs are just unbelievable for these companies. And, Micron also announced they're investing a lot more, especially at their new New York plant where they just poured the foundation. So there's a lot of things to be excited about. So I love all the memory stocks, but MU, STK, SNDX are all screaming buys.
So the panic and the spending don't match?
Well, there's a narrative out there that we'll get a glut eventually from all the ramp up. And both in Korea and in America, where Micron's expanding maybe 3 plants. And memory does traditionally go down, but right now it's looks like we got at least a 15-month order backlog. That's ridiculous. So the prices are going to be high until that order backlog is depleted.
You also wrote a Market Watch piece recently calling for accelerating earnings. Why is Wall Street still scared?
Because Wall Street doesn't pay attention to earnings like I do. Okay. They do when they come out, they assess it, but apparently I'm the only one that's obsessed with earnings. Okay. And when earnings are on, I'm on. And when Wall Street's distracted by something else, I may not be participating. But earnings season is my judgment day, and I go into every earnings season locked and loaded. I used to work all these marketing channels at all the firms and the pension consultants, and all they care about is what is your R squared to the index, okay? They don't care about your fundamentals. In fact, when I would talk fundamentals, they look at me like I'm odd. These are 40-year-old people that are very educated, but I guess they don't teach accounting the way they used to, and unfortunately, I learned a lot of accounting.
So the media is making it worse?
Well, obviously, the media isn't trained in accounting either, by and large. I take it back if someone got an accounting degree and is writing something. The media likes to glorify things and sensationalize things, and right now they're sensationalizing Michael Burry, who's a famous short seller, and I disagree with a lot of the stocks he's shorting.
Oil companies just posted record earnings. Is this a political target?
Not really. We've said it before, oil's still very seasonal. The oil inventories around the world got depleted. Everybody's rushing to restock their inventories because things are still uncertain. President Trump said he might take Karg Island, which is the deep water port where Iran exports 90% of its oil. And we had military strikes apparently on Karg Island the other day. But they let a lot of ships go through. Everybody's replenishing their inventories. Demand's going to drop in the fall after Labor Day. U.S. is really increasing its production dramatically. So the oil sector is going to have good earnings for at least another couple of quarters. So I'm not too worried about it, but there's no real political pushback. I mean, we need energy. It's how our Western world functions.
But now that Iran's ceasefire collapsed, is there a bigger risk?
No one cares about the Iran ceasefire. The reason is Wall Street has no attention span at all. So now if they attack America, that's different. Okay. President Trump says he's their number one assassination target. But yeah, as long as it doesn't come to our shores, I don't think anybody cares. And of course, America is energy independent. We're not impacted adversely by this at all.
Now, Mexico's inflation just hit a 5-year low. Could we be next?
Yeah, that's a very good sign. We're getting good inflation readings all over the world. And the reason inflation has been higher in the United States is due to owner's equivalent rent, housing costs, because we still have housing demand in America, and we still have a growing population from both a higher birth rate and, of course, immigration. And we still have a lot of immigrants that just come in legally now. So if the housing inflation cools off, yeah, we will get to 2% pretty darn quick. Again, all the components in the ISM, price components, manufacturing services fell dramatically. So it looks like inflation is decelerating. The other thing is the dollar's strong. Everything we import is getting cheaper.
Not to be a buzzkill, but what is the real risk to this market right now?
Seasonality, period. You're showing an article from CNBC. It's an old article. But the reason I hate August is everybody leaves and you can get these air pockets. And the worst air pocket was August 24th. And what happened is there was some news of stocks were hitting circuit breakers. They wouldn't let them trade, but they opened the ETFs. So most ETFs gapped down 35% of the opening because they couldn't price the stocks. And by the end of the day, a lot of those ETFs were unchanged. But like say you had a stop order on your ETF, you would have lost 35% at the opening. And the ETF we like to show the damage of is DVY. It's the iShares Dividend ETF. It's one of the safer ones. It lost 34.95. Wall Street trades by appointment, and I can't say that enough. The biggest risk we have is a flash crash in the stock market or a black swan event in the credit markets. I don't see the black swan event at all right now because institutional investors have replaced retail investors in a lot of the private credit deals. And furthermore, market rates are coming down, slow but steady. But, you can still have seasonal shenanigans, and that's what I worry about.
Speaking of disagreements, Mycroft says AI is already boosting productivity. The Deutsche Bank says that that's a year out. Who's right?
Microsoft, because they're in the business. Deutsche Bank, I don't know where they got that opinion, but they're wrong. And of course, they're not implementing AI in Europe like we are in America. So that's their problem.
Does that keep your 5% GDP call on track for Q3?
Yes, it does. But we're going to need about 4% productivity gains to get that dramatic GDP growth. What we're seeing now in the trade numbers is that the tech industry is just importing a ton of stuff from Korea, memory chips, Taiwan, GPUs, and NVIDIA GPUs. And then, of course, we're exporting less gold now, although energy exports are high. So if the trade deficit gets wider, it does impact GDP. So right now, it looks like they're taking 1.7% off the second quarter GDP just on trade. And so it's possible that if I threw out the trade deficit, we could get that 5% GDP growth. But it's all going to boil down to productivity gains and the trade number. Because business is booming in America. We're fine.
Now, Apple has been showing some real strength, and I believe that there might be a folding iPhone later this year.
That was the big rumor this week. I talked to an ex-Apple guy who gave me a big lecture that the folding phone won't happen because it has to use the iPad software, and I believed him, but it's leaking multiple leaks with multiple pictures that the folding phone is coming, but it'll be in short supply. Apple did sign a deal with Samsung Display some time ago to do this. So I think this is going to be a $3,000 phone. I think it'll be announced in September. It's called the iPhone Ultra. And if someone wants it, on the announcement, they should be on the Apple site, order it right then and there, and they might have to wait for it. But I'm sure with all your friends and everybody's going to want that phone. And I think that'll be a big hit. And I should disclose your mom owns Apple. We have some client accounts, and it's going to be spectacular. And I might very well maybe adding Apple to my managed accounts if I confirm that phone is coming. And I need to check the volume of it right now. But this is going to be one of the most exciting tech things to be announced, and that will be in September.
Now, before we end, out of everything we covered, which prediction are you most confident about for the second half of 2026?
Accelerating earnings for the rest of the year. A lot of it has to do with year-over-year comparisons. A lot of it has to do with the order backlog. A lot of it has to do with confidence rising. Normally, when you go into midterm elections, there's a lot of mudslinging and all, and that can distract investors. But there's a lot of disorganization with the main Senate race and things like that. So I don't see anything derailing the market other than maybe temporary seasonality. We should add that, we showed a chart from Bespoke of the AI boom in the go-go 90s, fueled by Netscape that launched the internet. Then we overlaid a chart of the AI boom we are in now, fueled by ChatGPT. And we have been moving lockstep with the go-go 90s, but we amplified, or Paul Hickey amplified, that when we hit the summer months, there was a bit of a contraction. And so that's the big risk for the market. But the earnings are so strong, okay? Every dip should be a buying opportunity. And I think if there's anything that's going to derail the market is, let's just say a company announces that their order backlog is not significantly growing. Some people will sell the stock on that news. But right now, the order backlog is 3+ years out for the data centers. They represent 50% of the construction in America. And that's why they're so dominant, and that you just can't get away from it. So this is kind of unique to America. Data centers are big in Asia. There are spots in Europe where they're booming. We talked last week about Poland and all. But this is really unique to America. And despite some opposition, there's a lot of room in America to put these data centers in. So I'm very, very bullish on that. But we need the order backlogs to keep growing. And so if they stall, that would trigger selling pressure.
So let's just recap. Heading into the second half of 2026, you're still bullish on memory, expecting earnings to accelerate while Wall Street stays fearful. You're watching August for seasonal risk, and you're betting on Apple's scarcity play.
Yeah, yeah. And again, talk to your friends. Whoever has that iPhone at a bar is going to get a lot of attention. Yeah. And so all your friends are going to have one.
Perfect. Thank you all so much for joining us today. If you enjoyed today's video, please give this video a like and subscribe if you haven't already. But we'll see you this Wednesday for a midweek update.